Hello, YouTubers, friends, compatriots, bootleggers, shells, doubts, slicers, peasants, vassals, babies, boomers, baby boomers. I'm a useful idiot, and today I want to talk about the fact that retail investors are bailing on the stock market. And this is an important trend, but I'll get to that in the end, in the big picture. But what we have is the stock market bull run since 2009, and individual or retail investors have been steadily pulling their money out of the market. And it's worked out to about $150 billion a year the last 3 years in a row. So the S&P 500 rallied about 13% in 2012, while retail investors pulled out about $152 billion from the stock market just last year. Third year in a row. And at the same time, institutional investors such as hedge funds and pension funds have been significantly adding to their positions, pouring $80 billion into stocks this year. And incidentally, the amount of money that is being plowed into bonds that the retail investors are being pulling out of the stock market is about $80 billion. So interesting coincidence there that hedge funds and pension funds are putting $80 billion into the stock market this year. So retail and institutional investors are going in different directions, and this is going to be an accelerating trend. In fact, just last November alone, retail investors pulled another $20 billion out of the market. And of course, there's no surprise here. There's a lot of fear, and why wouldn't there be? There's a lot of catalysts for this fear. U.S. credit downgrades, the debt ceiling battles, the fiscal cliff battles, the tech crash, the real estate crash, all the bank scandals, the flash crash, the Facebook IPO. Retail investors are very spooked. And as the exodus started around 2005, experts pointed to boomers pulling their money out, moving into bonds because they're retiring and they want a very safe haven for their savings. But a lot of the money is actually disappearing. It's not going into bonds. So a lot of that money, I believe, is being cashed out and spent for living expenses, because a lot of people have found themselves dropping below their previous means. And of course, the overall lack of confidence and the competition of all these new market forces, including high-frequency trading, which accounts for 80 to 90% of stock market moves now. So we're seeing the evidence of all the retail investor pulling out, relative light volume of stock trading overall. CNBC's ratings plummets after riding a high, while boomers were investing in the market, and a lot of magazines like Smart Money have disappeared. But in 2005, 57 million households owned stock, so I don't want to downplay the fact that a lot of mom and pop investors are still involved in the market, and individual investors still own 26% of all equities. So, but if you look at the bigger trend, mom and pop is still in the market, but this is a turning point. The bigger trend is that between 2007 and 2011, the drop of Americans owning stocks went from 65% to 54%, 11% drop. So that's a huge amount, and that's a huge shift of wealth, both middle-class wealth into bonds out of the stock market, and then a huge shift of wealth filling that vacuum from hedge funds and pension funds, picking up that slack in the stock market. So another part of the big trend is that we're going to see the stock market continue to become more of a playground for the big players and the institutional players and the speculators and the big investors. So this shift bears that out. And more ominously, what we have is boomers retiring, and they will continue to withdraw from the stock market, and we will not have young people moving into stocks, particularly because the ratio of them, that the 18 to 24 crowd that is underemployed or unemployed, is a huge amount. So they're not going to be filling that void. So this shift in the stock market will continue. So that is the big picture as retail investors continue to bail out of the stock market, and that trend will continue. 2013, 2014, 2015 will be no different, and there will be no retail investors to take their place. So this is a huge shift. So the stock market once again will continue to develop just as another money vacuuming tool for the insiders, the very well-placed, the wealthy investors, and a playground for the rich. I'm a useful idiot. Don't you be one too.